Welcome back to Live Now from Fox. I'm your host, Anna Marsig. Take a look at this X post on your screen there coming from the White House saying the beginning of history. President Trump arrives in Beijing, China to kick off a landmark state visit. Between that high stakes meeting between President Trump and President Xi and the latest inflation data making waves across the markets, there is a lot for us to unpack. So to break down exactly what all of this means for American businesses, global supply chains, and your wallet, we're joined by economist Dan Varroney. Dan, thanks so much for being here.
Pleasure to be with you.
So with the renewed focus on America First trade policies under the Trump administration, how do you expect the discussions between President Trump and President Xi to reshape global supply chains? What are maybe some of the contingency plans that major trade associations have for those potential new tariffs or trade barriers?
Well, let's just say that with the president and all of his policies related to the Big Beautiful Law and other key trade initiatives, what he has tried to do is to de-risk the supply chains, de-risk the pharmaceutical supply chains, for example, to make sure more medicine is based here and made here in the U.S. In addition to that, more natural resources and minerals are either going to be made and mined here in the U.S. or they will be nearshored. So I think the president, first and foremost, and his administration is doing what he can to de-risk supply chains and make sure that American companies have what they need. And then along with that, what the president has done is incentivize foreign-owned companies to locate here in the United States, to build plants and manufacturing facilities, and to hire American workers. So the president has been very clear about that. But the president is also clear about patent theft, copyright infringement, and dumping of products in the United States. The president has indicated to President Xi before this visit, and even in his first term, that the U.S. will no longer tolerate that.
So following the Trump and Xi meeting, geopolitical tensions, of course, remain a massive variable for the U.S. economy. From your vantage point, which specific domestic industries do you think are the most vulnerable to maybe any breakdowns in the U.S. and China trade relations? And how are they maybe lobbying to protect their margins?
Well, I think the way I look at it is as follows. We've got a backdrop here, and the backdrop is the conflict in Iran. China gets a substantial amount of oil from Iran. How and to what extent will that be a conversation, or will that be incorporated in the conversation with President Trump? My guess is it will likely be included. What we don't know is what will be discussed and what will be decided. I think the president is locked in from his perspective that Iran will never have a nuclear weapon. But at the same time, economically, this is hurting the Chinese. So you've got to know this is going to be a major topic of discussion. In addition, another major topic of discussion is going to be the high-level chips that NVIDIA makes, and that President Xi is interested in purchasing those. The president, I'm not sure, is ready to go down that road. In addition, President Xi is going to want to discuss Taiwan. That is always on the agenda. He'll want to know if President Trump is going to make any accommodation. So all of these things are on the table. And in addition to that will be these product and market access discussions. But the 800-pound elephant in the room, make no mistake about it, is the Iran conflict.
You mentioned NVIDIA. Jensen Huang's last-minute addition to Air Force One highlights that massive $50 billion USD market opportunity in China that NVIDIA is pretty eager to access. How feasible is it for the administration to balance the national security aspect of restricting advanced AI technology to China while simultaneously fighting for access to U.S. tech giants, would you say?
Interestingly enough, Air Force One picked up Jensen Huang in Alaska to go on this trip. So the question will be, what accommodations could be made by NVIDIA? What will the U.S. allow? My sense is it will not be the exact chips that they want. It will be a lower level of chip, and one that will not make us more vulnerable to threat from the Chinese. But interestingly enough, he's on the plane and he's there now on the ground in Beijing with the president.
If the Trump administration continues to push for a strategic decoupling from Chinese manufacturing, how realistically can U.S. producers maybe pivot without passing massive transitional costs down the line to consumers?
I think that's a great question, and here's why. When I look at the strategy of the Trump administration economic policy, and going back to the big, beautiful law, the 100% expensing, I think, is a key component of that. Incentivizing people. So think of the existing businesses here today. It's a huge incentive. There's never been 100% first year expensing before. So I think the president is building in tax incentives as a shield or a hedge against what could be higher expenses. In addition, the president, as I indicated just a few minutes ago, is incentivizing others to locate here in the U.S. So if there are U.S. companies making products here, he's incentivizing their foreign-owned suppliers to locate here. So I think the president and the Treasury Secretary have already anticipated that.
Focusing more on the economy now, we've seen significant volatility in energy markets. Can you break down the lag effect between fuel price spikes at the producer level, as seen in the PPI, and when everyday Americans actually feel that pinch in the headline CPI?
So the PPI, it's the wholesale price. That's what wholesalers pay. So what we're waiting for is when those prices will be passed along. The question is, will they be passed along? And if so, when will that happen? And the answer is, we don't really know right now. My sense is if this persists over another 60 to 90 days, I think there's a good chance that those costs will be passed along to consumers. But what I will say to you is that on the consumer price index numbers and the producer price index numbers, what's clear is that the energy price shock is prevalent in both sets of numbers, make no mistake about it. And the president, the Treasury Secretary, the Commerce Secretary, the entire administration is very well aware of that. And my sense is, now this is my sense, I have no insight or no information. My sense is that when the president returns, that he is going to either try and bring get a closed in the negotiations with Iran, or there's a possibility that kinetic conflict could begin again. I think the president's going to look to bring this to a close in the next 60 to 90 days. Now that I've said that, I want to point to you numbers that came out today from the National Retail Federation and CNBC. Now, we don't have the retail sales numbers. Those will be out tomorrow. But what that data said today is that consumers are still buying. But what I will tell you about those numbers is that consumers are being specific about what they're buying. They're buying things that they need. They're not buying across the board. But what I want to emphasize to you is that consumers are still buying. Now, with that being said, the underlying economy is still pretty solid. Jobs are still being created. People are still being hired. And the economy is not crumbling beneath us. There is also not a wage price spiral. That's good news. So I think as we look at the overall economy, while we're paying higher prices, we should feel good that consumers are still buying, that their businesses are still investing, and that we know what the issue is. It's the energy price shock. And that if it goes away in the next 60 to 90 days, consumers will start to see lower prices at the gas pump and lower prices at the food store in the following weeks and months.
So economists, of course, often look at core inflation, which strips out volatile food and energy. However, fuel costs inevitably bleed into the logistics, shipping, and manufacturing of really almost everything. So how heavily are current fuel prices maybe secretly driving those underlying trends in those core CPI and PPI numbers?
They made up, in the CPI numbers, about between 25 and 40% of those increases. And it was just remarkable how much it is driving the increases in costs. And the other thing that I'll share with you is that what we need to understand is that Oil runs right through our entire economy. Plastics, there are several hundred products that require an oil or oil-based components. Asphalt has gotten an oil component to it. So oil runs throughout the entire U.S. economy. Now, when we saw the CPI numbers and I read the PPI print earlier this morning, I just, there it is again. It's the jet fuel prices, it's the gasoline prices, it's the diesel fuel prices, and it's the gasoline prices that we're paying at the pump.
So looking at the latest spread between those PPI and CPI, do you think we're seeing producers absorb the higher cost of fuel to keep prices competitive, or is maybe the consumer currently bearing the blunt of the energy inflation?
I think right now, I think the consumer is bearing some of it. I think producers are bearing some of it. And the question will be how long this continues. I believe the president is going to try and bring the Iranian situation to a conclusion in the next 60 to 90 days. If not, I think alternative plans will be made. So remember, UAE is no longer a part of OPEC Plus. They are going to be producing more oil. And if they're producing more oil, they could ship it to the U.S. Venezuela is producing more oil. They're committed to producing even more oil. If they do and they can ship it to the U.S. or ship it to other markets, I think that could help steady and even ease prices.
One more question for you before I let you go. What are you keeping your eyes on during this Trump and Xi meeting tonight?
So what I will tell you is I'm looking for body language, Anna, because the body language, the picture paints 1,000 words. I'm looking at body language. What is it, how does President Xi respond to President Trump? How is President Trump responding to President Xi? That will give us a sense of how well the discussions and negotiations will go between the both of them.
All right, Dan Varroney there with that. Thank you so much. We really appreciate your time here on Live Now from Fox.
Pleasure.